Great. Hi, everybody. Thanks for coming. I'm Laura Dirks. I'm on the board of the Brewers Association here, serving as treasurer this year, and I own Interborough Spirits and Ales. And I am so glad to be able to welcome Dave Oxenhorn to give his presentation today on great, wonderful accounting topics. Dave is a director in the Research and Development Tax Consulting Group of Markham LLP's Long Island office. He's also an active member of the firm's Food and Beverage Service Group. He's advised lots of craft breweries ranging from startups to large, well-established breweries, and worked on their financial reporting, tax compliance, planning, and business consulting. And then in 2023, Dave and some of his friends launched a brewery called Two Havens Brewing Company, based out in Smithtown, Long Island, where they live, and hope to have a tap room in the near future. So welcome to the club, Dave.
Thanks.
I think we'll have it be interactive. If you guys want to ask questions as we go, and I'll hand it over to Dave.
Appreciate it, thanks. So, main topics we're going to be talking about best practices, efficiencies, as far as bookkeeping and financial analysis, going through some trends. We'll go through some detailed things. As Laura said, if anyone wants to just chime in as we go through things, we can hone in on some areas more than others, bypass some, and we'll kind of go quickly over some things. I'm happy to give the presentation afterwards if anyone wants it, for any of the details in it, so don't feel like you got to take notes from the slides. Other things discussing just best practices, efficiencies related to tax reporting, general management of your business, and then some other tips and tricks just for increasing profitability and growth. And then, like I said, we'll do questions and answers throughout, but if there's time at the end, a significant time, happy to have just like a general open forum, and you can just raise any questions you have, and I'm happy to answer what I can. So, basic thing here, which I would hope and expect a lot of you use, but I have seen people don't, use of a bookkeeping software. QuickBooks Online is the most common one that we come across. It's relatively user-friendly, it's cloud-based. It's going to save money and time just based on the fact that you can keep your books up to date as opposed to just use of Excel or having to look at your bank statements and then put that together at a year end. The biggest thing we have encountered with some people who haven't used it, especially in startup phase, is they're trying to figure out what an expense was from like a year ago, and we're in like April of the next year, and they're like, I really don't know what it is. I gotta go dig through invoices and things like that. I got this check where I scribbled someone's name, the vendor cleared it, but I really don't know what it's for. Pro tip, make sure that you don't commingle personal and business expenses. I'll show you just a brief clip that just kind of gives a little more flavor on that.
What's this? Looks expensive.
This is some new bedding. David,
Hold on, sorry about that. I didn't,
This looks expensive.
This is some new bedding.
David, didn't I just tell you to save your money?
Yeah, I am testing this out for the store, so work is paying for it.
Work is paying for your bedding?
I was gonna leave, but now I don't want to. So.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
So if I need booze to get through my day, I can just write that off?
That's a stretch.
But the skincare products you got this morning, those are a write-off.
What skincare products? You purchased skincare products?
Okay. I am the face of the company. If I have acne, what does that say about the legitimacy of the store?
That's not a write-off. That's not a write-off. This? Not a write-off.
Oh, well, the bedding's non-refundable, so...
David, a write-off is a business expense used to reduce your taxable income.
Okay, well then, why isn't it called a tax write-off?
It is! It is! You can't just buy things for yourself and write them off.
Well, then I'll return some things. There's not enough space in here for the massage chair anyway.
I should get back to work, just in case any more of your packages arrive.
So it's like a little more of an extreme situation, but all jokes aside, keeping like your business expenses and your business income versus your personal expenses and personal income separated is key because it makes it easier for determining what's business versus personal. I've had plenty of times where clients commingle things, they're going, they're spending stuff for their house versus the business, whatever it may be, and then you got to unfold what makes it more difficult. If you're in a bind where you need to use personal funds to pay for something for the business, deposit the money into the bank account for the personal to the business bank account, and then pay out of there. That's the easiest way to do it and keep that all kind of siloed off. So sticking with like the bookkeeping aspect of it, but going towards like scheduling of tasks and like things to just kind of keep in mind. And I've kind of mapped it out on like daily, weekly, monthly, quarterly, semi-annual, and then annually. Daily, weekly basis on the bookkeeping side, make sure that you're downloading or inputting the income and expenses that you have. QuickBooks and all the other major bookkeeping programs have this feature. It works really well. Download that information from the bank account, download from the credit card, and then it's as easy as just categorizing it. And then if you have recurring expenses that come up, even income too, it'll automatically recall that. It makes it easier to just keep hitting that and putting that in. But you want to keep on top of it so it doesn't become as much of a task. Maybe daily is a bit much, maybe even weekly. Like I can't do that every other week. At a minimum, at least monthly, so that you don't have to go through and do months worth, which could be pretty time consuming. And also keep in mind, the more often you do this, the more updated the books are, so you have real-time data there as opposed to looking at something that's so far in the past that's really stale data that's not going to do you as well. Monthly basis, make sure that you're reconciling your accounts, bank accounts, credit cards, if you have any loans. On the accounts receivable side, reviewing that just to see if you have any wholesale accounts that owe you money so you know who to go back to. Are there any that, you assume someone out of business or for whatever reason you're not getting paid on, just write it off if that's the case. Looking into and analyzing the accounts receivable, is there any way that we get paid quicker as opposed to getting a check in person or cash? If we offer electronic or credit card payment, is that something that'll entice them to pay maybe on delivery or at least pay a little quicker? Obviously there's some fees along with that as far as bank transfer coming in and credit cards, so keeping that in mind, especially if it's bigger amounts. If you want to offer that, if we offer some terms to some accounts, does that help increase the sales? Would that entice them to take more? But at the same point, we have the risk of having a product out there that we may not get paid on. Obviously, we would only want to offer this to good customers that we have, but something to keep in mind. And then same thing on a monthly basis, reviewing any accounts payable we have outstanding. Similar to the accounts receivable, is there anything on there where, for one reason or another, it's definitely not getting paid? I don't know, we had some kind of argument with the vendor, or we sent something back, it's still listed there, we're never going to pay it, let's get rid of that. And then the same way that we would offer terms to our customers, can we get terms from our vendors? Can we get a float from them, some type of credit? Can we use credit card to get ourselves an additional float, so we get like another month until that's due? Those kind of things to keep in mind. Quarterly or semi-annual basis, if we're keeping the books up to date, we want to make sure that we're looking if there's any issues for things that aren't working. See it in real time, don't wait until the end of the year so that your accountant gets it and then has to then unravel it with you, or your bookkeeper. Common issues that you usually see where there's issues, accounts received, accounts aren't reconciled, or they're not reconciling like significantly, not off like $1 or $2. Like our bank balance shows negative $100,000, but we have $50,000 in the bank account, so something's not entered properly. Trying to identify these sooner. Negative credit card balances in the books mean that you're just posting payments there. You haven't pulled in the actual charges. Loan accounts not properly reconciled, so not split between principal and interest, so they're not matching up to what's due as of that period of time. Other issues too on the accounts receivable and accounts payable side. You have some duplicate postings. Maybe there's some large amounts that are old or outstanding in there, or your bank reconciliation, something just to keep in mind. Those are usually the key things that I see, and we'll get it on an annual basis, and going back is a lot more difficult than if someone's looking at that even on a monthly basis to see for the period of that month. We were good before then, okay, that way we don't have to go month by month or week by week to try to figure out what the issue is. Other things to do, analyzing your books just to see trends. So what's worked for you guys, what hasn't worked, what's worked for events. If your business is, the brewing industry has seasonality in general, but if you're in an area that maybe has a larger tourism area aspect, maybe you have more seasonality, so just kind of addressing that. Other things on that would be like days to stay open. So based on these trends, we can analyze, okay, like maybe we can analyze, determine if it makes sense to only be open 3 days instead of 4, reduce the amount of hours, maybe reduce the amount of staff we have. How often do we want to be brewing? Would brew more or less? What are our needs for the tap room or for wholesale if we're doing that? The frequency of our expenses, obviously we have fixed expenses we have every month, like rent, utilities, whatever else, but other expenses, can we reduce or plan for these in the slower months, or can we reduce them when we are slower? Again, if you're maintaining your books in a way that you can analyze the beers that you're brewing as far as the costs and the sales, is it something, we like this beer, it's sold, but it took us 6 months to sell it. Do we really want to do it again? Does it have a low margin on it? And it doesn't really give us much bang for our buck as far as even the marketing aspect. Maybe we just won't brew that anymore. Comparing your brewery to other breweries and the benchmarks for the industry, there's a lot of good resources out there to get some like trends and analysis as far as how everyone else is doing. You can kind of scale that based on the size of your brewery, but also comparing your brewery to your brewery. So looking at your past results, so year over year, quarter over quarter, or whatever it may be, just to see how did we do last year and why are we doing better this year or why are we doing worse, and then kind of looking through the detail of that and seeing how we can even improve upon that. Even if we are going in an upward trend, which is good, how can we continue that? What did we do that led to that? Other things to look at: cash flow statement analysis, so your profit and loss, the cash in your bank versus the cash flow, kind of just addressing all those cash sources that come in, sales, bank debt proceeds, your owner contributions, if any, and then identifying possible needs for other cost reduction, or maybe even looking into some contract brewing to help supplement. Maybe you're seeing that you're going to need, you want to go into distribution and you want to scale up, but it doesn't make sense to scale up the brew house to accommodate it, so maybe you're going to go into some contract brewing just for a part of the business. Other cost analysis things that have gone through here: cans versus kegs. What's that split look like for us? What do we, do we have a lot of, obviously internal we have draft lines, but externally we have a lot of wholesale accounts with draft, or is it primarily cans? Other ways that we can reduce costs as far as like pricing of the beer. Obviously you can only price it to a certain amount, but knowing what your actual cost of the beer is key, because that way you can review and see how you're doing. Other things: do we need bank loans? So based on like where we stand as far as a cash flow standpoint, do we need to get some more cash coming in? How's that? If we don't want to do that via our own personal contributions, are we looking for bank loans? Are we actually bankable? So are our financials in a position where a bank is going to be willing to give us money? Are we in like a negative equity situation, or we just aren't showing good profit and good margins? Like those things to address ahead of time, and obviously speaking with whoever your bank is now, at the time, to kind of have those conversations up front. But having good books and maintaining that will give you a good way to see where you stand on that. Also reviewing some key performance indicators. These things include things like cost per barrel, yield percentage on brewing, packaging, like labor hours per barrel, but make sure you're not creating metrics that are something that's going to be difficult or time consuming to calculate and maintain. You're basically at that point, if you're spending that much time doing it and you're not getting much benefit from actually looking at those, then there's no real purpose in maintaining that. So you kind of had to see what makes sense for you as far as those key things to look into, and then reviewing them on a regular basis. Annually, similar to monthly, make sure all your accounts are reconciled. If you have any other accruals or any adjustments, got to be made at the end of the year if you're known. Key thing: inventory balance at the end of the year. I'll talk about a little further about like add-on software that people use to maintain inventory, but that's key. Obviously, it's going to also help you maintain and figure out how much time, how much you need to do purchases, frequency of that, and other things that all relate to that. So that's a key thing. Budgeting and forecasting can be more frequently than annually, obviously based on needs. Maybe you need to budget or forecast out for a specific project. Maybe you're looking to build out or expand operations in one way or another. So you need to budget and plan for that. but otherwise it could be something that you do annually. And on the budgeting side, like make sure that you have goals set. Where are you now? Where do you want to be? You know, how are we doing? Or do we want to scale up? Or do we want to scale back potentially? Maybe we're brewing more than we can actually sell, and it's just costing us, even if we're eventually selling the product, it's costing us too much on either having a sales team or distributor or whatever it may be, or it's just taking away from what we're doing otherwise as far as our goals are concerned. So talking about like add-on bookkeeping software, does anyone have any of these type of programs, whether it be POS or inventory, that like kind of bolt on to like QuickBooks or anything like that? Do you guys like them? I got one thumbs up.
What did you say? It feeds into QuickBooks?
Some of them do. So like Ecos, I know can feed into QuickBooks. I mean, I haven't dealt with it recently myself, but in years past, it's been kind of tricky where it's kind of.
We had some issues with Ecos.
It sometimes screws up. Not even just on Ecos, other ones too. They're supposed to layer in seamlessly, but it doesn't always work. So
like
oftentimes.
misqualifies cogs and stuff. So
Yeah, oftentimes the recommendation from us is just maintain that separately so you have a log of that, and then we'll just kind of journal entry and whatever those balances are at the end of the year. You can track it in real time in these programs, but just addressing if you even need it. Sometimes people say, you know what, I'm able to maintain it outside of something like that, but some people like it. The POS system integration can sometimes work well, but sometimes you get messed up too. Some of the ones on the POS side, Arrive, Square, Toast.
I end up used to use Square, got into more of a restaurant, went to Toast, and it's difficult. I understand it's supposed to be pretty good, but I do exactly that. End up doing the journal entries weekly in order to record the activity. But we are on a call with them 7-8 months later daily to try to still work through issues. It's a much more complex system we're using than what Square was doing, but Square was fairly simple. I kind of enjoyed it. I don't know if it could keep up with what we got now though.
Square has some problems.
Yeah.
They've been changing the whatever the sync app is with QuickBooks, and it's been having a lot of problems unless you want to pay for one of the premium services at whatever blank per month to make those two integrate.
Which one is that?
Square to QuickBooks.
Oh, Square to QuickBooks.
Yeah.
For Toast to QuickBooks, I use a software called Shogo that is kind of just create a mapping, and then it'll run and integrate with, it runs from QuickBooks and pulls in the Toast data. It's, you have to watch it or whatever. I used to do journal entries as well, or do sales receipts and stuff from Toast. The Shogo
What was that called again?
Shogo.
Is there a monthly fee?
Yeah, it's like $50 a month.
Yeah.
But it does run daily and keeps the numbers up, so.
Does it make with it running daily, does it make your QuickBooks, does it make it voluminous?
Does it make what?
Does it just put a whole bunch of stuff in there if it's running every day to kind of, if you were trying to filter through, would it be a ton? The one thing I like about the journal entry is I can see my, 30 numbers once a week. If I was getting 30 numbers once a day, I might have some trouble trying to.
You can run a report and see what goes into what bucket, and
Gotcha.
it is like mappable.
Okay.
So you can map the sales categories from Toast to, to whatever chart of account you want. So you can bucket it in different ways.
Gotcha, thank you.
Yeah, I think the thing that I've seen like with issues with all these, or some of these at least, is just that it'll bring things in on the sales side and net of fees, so then things aren't in there properly there, or people duplicate things, they bring it in from the POS and then the bank, and then they have unmatched transactions. So those are kind of key things to keep in mind. Something like that, Shogo may be a way to kind of work around that and fix that. It's just something to keep in mind though. I mean, you don't have to link it necessarily, but it also becomes a pain, and then you have to go back. If you do want to see the detail of it, I get it, that you're like, I get this long journal entry that I recorded, but if I want to see the underlying detail, I have to go back to another thing. So you obviously want to keep it all in one place, but at the same point, you don't want to, complicate things where it becomes difficult for you to even be able to maintain using that. So it's just something to keep in mind there. I mean, any of the add-on things on the inventory, COGS side, especially like they are an added cost. If you're not gonna use it, then obviously it doesn't make sense to have that. If you're not gonna use it for analysis and maintaining purposes, and then just keeping in mind too, if you're not using it properly, it's like junk data in equals junk data out. So if you're not using it properly or you're not using it all, then it doesn't really even give you any benefit there. On the inventory side, obviously, key thing to keep in mind, just so you want to have an idea of where you stand on as far as levels. Beer on hand, obviously, kegs, tap handles, if you got stuff going out for wholesale. It sounds like a minor thing, but like, if someone's like, hey, I need a handle, and you're like, I don't know if we have it left, and we go check, and you're digging around, something to keep in mind. Food costing, recipe costing, all those things can play into your inventory to kind of see where you stand from a cost standpoint and giving you a better way of pricing out the beer, and then also maybe even making substitutions or changes to recipes potentially to reduce some of those costs. Bookkeeping, do you want to get a bookkeeper? I mean, how many people here have a bookkeeper? Okay, so like maybe like half the room, a little less. I mean, the pros, obviously, you're freeing up time, so you can focus more on business growth and other things. Obviously, you're going to want to have some oversight, and then obviously be looking at the books just for analysis purposes. We're not spending the time of actually doing the inputting, reconciliation, things like that. And then you're potentially going to have more accurate books and more up-to-date books for you to review. Obviously, the one con is the cost, but it may save you some time with your accountant at tax time, just because that way you got a complete package. It's done more efficiently, timely, and then that way there's not as much back and forth with the accountant on maybe questions or maybe even you trying to figure out what kind of expenses or income was in there from a year ago.
Dave, can I add a con or
Yeah, sure.
ask you about a con?
Sure.
The con I've had is that I have people who come and say they're a bookkeeper and then do a really bad job not knowing what they're doing. And so I've found the con of like supervising the bookkeeper is a con.
Yeah.
Versus doing it myself.
I can see that. Yeah. So obviously, if you have someone who you find out after the fact is doing a poor job or isn't as qualified as they made themselves out to be, then obviously you're spending possibly more time unraveling the mess that they made, or just working with them, or not having comfort where that you feel like they're maintaining things properly. Maybe even if you're using it for bill pay. I mean, does anyone have their bookkeepers doing bill pay, or they're just some people walk the line of like, do I want to have my bookkeeper doing that? Then it starts getting into a little more of like a full service bookkeeper or bill pay service kind of thing. But obviously, yeah, you want to make sure you can the best you can vet whoever you do bring in. Yeah.
And maybe you'll get into it later, but I specifically came in for bookkeeping because it eats my entire life. Trying to upload receipts, all that stuff. 200 purchases a month. Is there best practices or workflows that you guys recommend to better get through that process? Or is it better off hiring a full-time bookkeeper who still wouldn't know where the receipts came from or how to find them? I didn't know if that was something you guys could dive into a little bit.
So uploading the receipts just for like documentation retention?
Yeah,
or?
documentation retention and then categorization from the 300 things that go through the account every month.
Yeah, I mean, for the 300 things that go through the account per month, like a lot of it is recurring. At least it'll pop up and like still recall it. But I mean, there is some. I think there might be some like batch like posting kind of thing for certain things. But otherwise, it's going to go transaction by transaction. So there wouldn't be much way to eliminate that aspect of it, unfortunately. But obviously, bringing someone in to do it would obviously alleviate the time for you personally. But someone's got to do it.
Yeah, but I mean, if they don't, if I have to provide them the receipts, like there's obviously no way around that workflow, right? Like if I was the one that made the purchase and collected the receipt, unless I delegated that to someone like the kitchen person for food ingredients, there's no real workflow around like just that manual upload of all the crap constantly.
I don't think so. I mean, does anyone deal with any kind of program? I know
Does
there's
it pull in from your bank transactions? Like,
Some of them will.
Okay.
Yeah. Well, I mean, it'll come in, but to create an expense to match with
Oh,
what has
okay.
come in through the bank transaction, as far as like logging some kind of documentation for it and categorizing
Right,
it.
right, right.
Are you using QuickBooks?
Yeah, yeah.
Yeah, so I've got credit cards
Mhm.
kind of for each location. QuickBooks pulls it in, I categorize it. Generally, they're large things like my grain goes goes
So
through a
specific
credit card,
yeah.
or a check.
Yeah.
Honestly, I don't bother with receipts that much. I don't try to upload them. It's a big waste of time. If the IRS is to come in and look at my books, or New York State is to come in and look at my books,
Mhm.
I'm going to go directly to my supplier and say, let me support 3 numbers: my hops, my grain, and something else that's big, my yeast. And that's gonna get me 80% of the way there.
So it's more of a conversation with my accountant then.
I think so. See what
Okay.
they're comfortable with you doing.
Yeah, that's, I think.
But I'm not trying to get I'm not trying to get a $40 charge to Staples put in there. It's on a credit card.
Yeah.
If you got people, if they're chasing down $40, they need to go after somebody else.
You're saying you get like a summary from your supplier of your transactions with them, is that what you're saying?
Yeah, I could go to them and get
If you were audited.
if I was audited.
Yeah.
Like BSG, give me a history of my
Everything
past.
for audit.
BSG, give me my 2023 transactions.
Right, okay.
Make
They
sure-
could
make
print
sure it
that
comes
out.
Close to whatever you categorize, and that should be good enough for an audit.
In my mind, it is. Yeah.
I mean, they're gonna select a sample of it all. I mean, so if they're going through, I mean, it depends on what kind of audit they're looking at, but if they want substantiation for expenses like that, which is probably easy, they're gonna pick a sample. So if it's a course of 2 years, they're gonna pick like a period instead of looking at, 2,000 invoices. But I would think like the suppliers probably give you a lot of those electronically anyways, so you could probably just file them all in like one location, just, put it by year and by, I mean, obviously, like, I've seen people upload the receipts or even the electronic invoice in QuickBooks to like accounts payable or kind of have it so it's like side by side already matched, which is obviously great, but it's time consuming. So
Super talented.
yeah, so I mean, I definitely maintain it, but you might want to just maintain it outside of the bookkeeping software. Just kind of keep it on the side. If something doesn't looks out of whack when you're going to pay, you're gonna flag it before you pay it, saying that should have been $40. Why is it $4,000? Someone slipped a digit on the invoice. So
Yeah,
let's-
one last thing, rather than, I don't just, if I get an email with an invoice, I tuck it away into an invoice file in case I had to recreate a little something. I could probably do 10 or 20 invoices a month and get most of the way there. And then if I do get something in the mail, I got a little paper file that I keep. But I don't know if I'm at 300 transactions a month, but I might be. But I'm with QuickBooks Online, I'm not taking a ton of time on it. It's remembering, and I'm probably.
So you just go in and categorize, done.
Yeah.
Okay.
Yeah, match, add, and most of it's there.
Do you use any software for inventory management, cost of goods sold and stuff, like Ecos or?
That's all spreadsheet. Well, it's a homebrew software, honestly.
Okay, yeah.
But,
Because for us, I mean, it varies on scale, right, on where you're at. As a larger brewery, there were in Ecos, there were inventory receipts. So I had my staff uploading a copy of the invoice to each inventory receipt and storing it there for reference for us. But then all the data just would sync to QuickBooks, and I could reference it in Ecos if I needed it, if something didn't seem right, or if I get a statement that doesn't match what QuickBooks says we owe, then I could go back to that. But I'd say, from personal advice to you if you're a smaller brewery, store them in Gmail. Store them in your email. Make folders for the invoices per month or per quarter or something, and just stick them in there. Like Dave was saying, you just need it if you need it for reference. You'll have them for reference. But QuickBooks is probably not the best. It's obviously not the easiest way to do it, but probably not even the best way.
Other things you can leverage within most of the bookkeeping software, customer tracking. You can track trends of sales within their last orders, contact info. Classes or other tracking, I don't know if anyone uses this, if they have multiple locations or they want to track beer costs by beer or by draft or cans to go. Has anyone used any of those features?
I use it for our brewery versus distillery versus shared costs and versus tap room.
Okay.
So that I can separate it and almost having hopefully a P&L that's by each sort of business unit.
I mean, the only thing there, obviously, it's similar to everything else, is does the time, for you, it obviously makes sense, but if you have like a small piece, does it make sense to have to go in? It is an extra step to make sure that whoever's entering it is toggling off to the right thing. So, obviously if you're not coding it properly, then it's not going to serve you any benefit. But, if it serves a benefit there, then it makes sense to spend a little extra time, and that way you can run reports by those different locations, divisions, whatever it may be, see where you can reduce some costs or increase some revenue. And as far as systems, I mean, you could have one person handling it. I know, some people in here saying like, I'm doing everything. Should I get someone else involved? Does anyone have like multiple people within their team that do different aspects of it? They touch the books, or is it just one person that's like in the trenches and that's it?
We have AP and AR oversight on both.
Okay.
So we kind of partition it out, but it is kind of.
Okay.
So you know what expenses are incurred, cash and balances.
Yeah, it definitely cuts down the workload, and then you get that oversight there too, which is great. So we dive into some of the tax reporting things. Obviously, the tax requirements here, all the things everyone knows about, 1099s. Make sure that you have the Form W-9 for anyone that you give an independent contractor for, just have it in your files. That way, at the end of the year, you're not trying to chase someone for a social security number or an employer ID number if it's an LLC. New York State resale certificates, I don't know how technical answer is that if you're dealing with any kind of wholesale account, you're supposed to get the resale certificate, have it in your files. I know a lot of people haven't done that, but best practice, as soon as you get signed on a new account, hey, can you fill this out? Most of them are pretty familiar with it. They won't really give you much pushback, but at the same point, everyone's busy and sometimes you just kind of forget. But wherever possible, kind of just have that like in a folder with, with maybe your invoice or whatever else that you're bringing by. Hey, can you just fill this out quick or email it to me? Obviously, annual income tax, payroll tax, sales tax, New York State can deposit. Everyone doing the 5-cent can deposit for New York State. Excise tax, federal side, TTB, and New York State. License and permit renewals. I know there was a couple SLA sessions last time talking about the slow processing time. So keeping that in mind as any of these permits or licenses are getting close to expiration, because it takes so long for them to process it. So basically, like my license for my brewery was expiring in December, and they told me to mail in a check, I think, at the beginning of November. So, which is ridiculous. They cashed a check in 3 days, but then I think it was like January before I heard back that our license was renewed. So, whole thing is pretty crazy, but that's another session. Other things just to keep in mind: consider maintaining separate bank accounts, segregate the funds. I have separate bank accounts within the same bank that I use for the operating account, for the can deposit and the sales tax. Just makes it easy. I just transfer money into there to have a liability, or I let it build up in there, and then when I gotta pay it, then it's already segregated out. It's basically like it's already gone. It just makes it easier. I guess the other thing too, let's go to this page. Everyone's kind of maintaining different systems, different programs for things. Just make sure you have reminders for things. I know a lot of times I've heard people say, oh, you know what, I did the excise tax filing for last year, but I completely forgot for this year. It's just because I don't get any notices from, this agency. I don't really, I'm not contacted that it's due. Obviously, it's not their job to do that, but at the same point, just have something, whether it's an Excel file where you just kind of map out each month or each quarter, each deadline ahead of time, and you just kind of mark it off when you've done it. Maybe an Outlook email reminder, or Gmail, or calendar, like just something. Just have something that like you lay out for the whole year, and then like on a monthly or whatever basis, you can just kind of look at it and be like, oh, that's coming up. Let me make sure I have that information and have it available. Payroll tax service professionals. This I can't say strongly enough. I've had some people outside of the brewing industry primarily, but have tried to do the payroll themselves, and they're able to do it. But then as soon as you forget to make a payment for a payroll tax deposit, it becomes like a huge issue. So highly recommend using a payroll tax professional. The benefit there definitely outweighs it, because if there's any issues ever, it's on them, not you. FICA tip refund reporting is generally provided with their service. Makes it nice and easy to give you a report. You give that right to your accountant for the tax return. The other thing too, they can possibly provide some assistance if there's any work opportunity tax credits. You need to identify if anyone you're hiring is in any of these targeted groups, like veterans or ex-cons or something. There's a whole long list of them, but they can assist with that as well, so something just to keep in mind. So sales tax, the can deposit and excess tax. I talked about having a separate bank account, but tracking it can be a little bit of pain, but it can be also very easy, especially if you're already utilizing it within your books. So sales tax, you know, your invoicing, you can have that liability sitting there. Can deposit, same thing. As your sales go through, that should already be hitting the accounts. So you can run these reports pretty easily on a monthly, quarterly, annually basis, and then it's basically just taking that number, just plopping it on the form. It makes it pretty easy. We talked about segregating the money into different bank accounts. If you're preparing any of these yourself, sales tax or the can deposit, excess tax, have some kind of template for yourself, but make sure it's consistent. So you know, every time you just have that same template, it makes it very easy. You don't have to really think as much. You set it up once, maybe you make some improvements on it that works better for you, but otherwise, you have all that information there, and it's basically just taken from one box to the other. Or even if you're having your account prepared, at least that way you have all that information. It's easier to pull that information to them, provide to them. Same thing goes for things for the excess tax, like the gallons and waste. Needing gallons for New York State alcohol beverage production credit that you report annually, get a refund of that New York City and New York State excise tax, New York City if it's applicable to you. So things just keep in mind. Again, just more systems and having those tools for yourself, and then for others, it reduces work on your end, reduces work on any professionals you're using, which obviously reduces their time and it reduces their fee. Income tax, again, just stressing, make sure the books are fully updated. If there's any information that you need for tax credits, like the excise or the New York State alcoholic beverage production credit, having that available. Usually they'll give you like a punch list of all the stuff that you need, so it's the same thing year over year. But just making sure that it's not another project for you. We're all busy, so making sure that you have that. I mean, big thing, like I said before, reducing that back and forth with any professionals that you have, it's going to reduce the time, which is going to reduce the amount of fees you got to pay. Because obviously there's a significant back and forth, whether it's cleaning up the books or just assisting with maybe pulling some other information. It's going to take more time, which is going to make it more expensive. Just a couple things here. R&D tax credit, I've done separate webinars on this. You can access it on the New York State Brew Association, but even if you're not profitable, if you're under 5 years in existence and under $5 million in gross receipts, you can take the credit against payroll taxes. So it's worked out very well for a lot of breweries who are like, hey, well, we're not making any money. It's like, well, you can offset it against payroll tax, and then obviously when you become profitable over and above these thresholds, then it'll go against income tax, which is very helpful. Main portion of the credit here is going to be based on wages and then supplies. So again, this is where it's key to have good books and records, especially as it relates to brewer time, brewer ingredients, and brew logs too. And then just a few things I just put on here just as like some last takeaways, and we could just kind of jump into. Yeah.
Back on the R&D credit, I'm sorry.
Yeah.
I thought the R&D credit was for if you could do materials, time, whatever, for new batch, new equipment, new process, whatever. And that applies, I'm trying to figure out how the R&D credit applies to that no profit, no problem on
So,
thing.
yeah, so the R&D tax credit is a dollar per dollar reduction of income tax liability.
Yeah.
So let's just say it's a corporation. If it's a corporation and it's taxed at the corporate level, it'll offset the corporate income tax. If it's a passive entity like an LLC or an S corporation, then the ultimate owners would get the credit. So if you're operating at a loss, so you have, I don't know, you lost $10,000 for the year, there's no income tax, so there's nothing to offset. The credit would get carried forward, which you can utilize it at a later date.
Oh, okay.
But if you're under 5 years old and your gross receipts or your sales are under $5 million in a given year, then you can elect to take the credit against employer-paid FICA and Medicare.
If you have the R&D credit.
If you're the R&D credit, yeah.
Gotcha, okay. That's
Yeah.
the thing with my account now.
More on the R&D.
Sure.
Is that credit still in existence for 2024?
It's still in existence. They made the credit permanent a number of years ago. The only thing that came into play starting at the beginning of 2022 is that the costs had to get capitalized. So that's the only drawback. So it's a timing difference. So basically the way it works is, let's say we identified $100,000 of wages, supplies, and we use some contract brewing for whatever else. It's all R&D related, and that's going towards the credit. That, in addition to some employee benefits and some other expanded items, gets capitalized. So instead of a $100,000 deduction in year one, we only get 10% of that, or $10,000, and then it goes over a 5-year period. So we get it over the rest of that time, but we have to capitalize it and then amortize it over that period. So that's the only thing that's in place as of January 1st of 22, so 22 and forward. There was 3 bills last year, and then there's a bill out there in January of this year to defer it further, and that would go away, where you would just be able to expense it. They always had the option, you could either amortize it or expense it, but then they put it in place where you had to start capitalizing it. It was mandatory. And that's even if you don't take the credit. So if you have identified R&D expenses, then you're supposed to be capitalizing those as of last year. And the last thing here is just a few things I had to put on here. So like, obviously, you can put a vehicle in the company's name, register insurance, depreciate that, get some deductions, renegotiate your lease to a more favorable market rate if it's unfavorable, or offer to extend it as a sweetener. You can talk with the local economic development office, see about programs or assistance for availability or for reduction as well. So just a few last takeaways. But I just wanted to kind of open up, if anyone else had any other questions about anything we talked about or anything in general. I left some time open for questions and anything else. Or if you want to revisit anything else we talked about, happy to talk about it here.
At the end of this session, are we able to get the slides emailed to us?
Yeah, definitely.
How long do you keep records for?
At least like 6, 7 years. Because they can go back, the tax years are open for 3 years, so they can go back as far as 7, so it's best to keep it for 7. So more electronic is easier way to do that, obviously, than have a lot of paper, but most of the stuff comes electronically at this point. I mean, I guess I'll ask you guys a question. What keeps you up at night, or like what's the biggest issue that you're having, whether it's tax, accounting, financial, like anything that I may be to answer while we're here. It doesn't have to be necessarily exactly tied into like the slide.
Something I'm looking at right now, there's a bunch of vendors upstairs that help with merchandise.
Okay.
And my understanding is they can set up an online store. The sale kind of goes through them, so I can sell outside of New York. Let's just pick on New Jersey for a couple minutes. I can sell to New Jersey. They take care of the sales tax or have some sort of mechanism in New Jersey that takes care of sales tax, which is kind of front and center. What never really gets discussed is the income tax piece. So I'm not going to sell beer there, but with the economic nexus statute that they have, it's like 200 transactions or whatever, $200,000. And it doesn't take a lot to get up to 200,000 transactions. So I'm thinking of Equilibrium and some other people that are shipping merch and beer. How are they filing in all these states, or how are they getting away with it?
So like, if they're doing it direct, then I mean, I can't speak for the breweries, but they probably should be, based on the fact that they have economic nexus rules as far as the amount of money in the transaction. And then also in these states where you can do direct to consumer, you're generally getting like Secretary of State permission, like through like a permit kind of thing, to be able to do that, which then just ties into the income tax aspect of it. If you're just getting merch out there and it's going through like a third-party service, depending on the way they set it up, I've seen it where it's like you're not getting the sale piece; they're just giving you like almost like a, not a commission, but like they're giving you like a payback on like a net profit margin, and then they're just so that you're not really the one selling it. You have to see how it's set up because it really.
So it has to, so that gets tricky. It has to be titled so it's some sort of a kickback, but it can't be I don't think it can be a royalty.
Yeah, no, not a royalty necessarily, but yeah, it's something. I don't know how they would. I don't know how they have it set up. The one specifically upstairs, but yeah, I would be careful of that just because you don't want to put you in a place where, all right, we sold $1,000 worth of T-shirts, but now I got to file in like 4 states.
Yeah,
so it's like because I have seen instances, and especially like during COVID when people were doing more of the D2C stuff. I had a number of clients that did have to start filing in states, and then they subsequently withdrew from the states later because it just didn't make sense from a business standpoint.
Yeah, that's my fear right now. Just trying to get a feel for that, because it could open as an LLC that as a partnership, having all our members file in 10 states is no good.
Right, especially it sounds like you said you're not even sending beer out, it's just merch.
No, it'd be a nuisance amount. It'd be,
Yeah, so-
you know, 0.000 something.
Any other questions?
Have you tried any of the other software packages like Zero or?
I've had some college use Zero. There was like a trend where a lot of companies were starting to use it more, not necessarily in the brewing space, but in general. And they found it pretty good, but I mean, they all have their quirks. So QuickBooks seems to be the most widely used. I don't know if they just have a better marketing campaign. I mean, I know like Orchestrated Beer is a big one for the larger breweries I've seen. Ecos, obviously. There's some other ones that have done like full systems. So, but QuickBooks seems to be the one that's out there that most people use and seem to be familiar with.
Or some uncommon write-offs.
Uncommon write-offs?
Yeah,
Like
you
things
don't
that are
realize can be write-offs. Is he good?
I don't know, maybe something, yeah, I'm trying to think, well, legal write-offs? Yeah, I mean, I would, you know, most of the guys are probably familiar with, obviously, all the equipment gets appreciated, we can accelerate that, any improvements at the brewery. Obviously, all the costs that go into beer, I'm trying to think if there's anything else. I mean, the only thing to keep in mind, it wouldn't necessarily be an expense for the brewery, but if there's things that you're paying out of pocket that aren't going through the brewery expenses, like you as a member or a partner of your brewery, like it's been said that like, hey, the brewery's not gonna pay for this if it's attending conferences or my, you know, reimbursement of travel, things like that. You can take unreimbursed partner expenses on your personal return, helps reduce your own personal income, you know, so it doesn't go directly through the brewery. I have seen that where people say, hey, listen, I have all these expenses that are brewery related, but like my partners said, you know, and we agreed that, you know, the brewery's not gonna pay for this, like they don't feel like it's a worthy expense, but I wanna do it and it's brewery related, I'm going to CBC and I'm traveling there, I'm getting a hotel, and I'm doing this, but, you know, I'm paying that personally, so then I'll take that on the personal return, so at least it's not lost.
What'd you call that on personal return?
Unreimbursed partner expenses, if you're a partnership or an LLC. They have similar type of expenses for other ones too. Obviously, not if it's like a full corporation, but if you're a pass-through entity.
I think there might need to be something in the partnership agreement to spell out how that's done.
Yeah, generally, yeah. You need to have some kind of documentation in there. So if you already had the discussion, it's documented that, hey, we're not paying for X, Y, Z, and you're like, well, I want to do that anyways, and it's legitimate, then you can do that.
But not if you're a corporation.
If it's a corporation, then yeah, because you're. I mean,
If it's a corporation, you should have a corporate policy and submit stuff for expense reimbursement.
But if it's not agreed upon by the corporation?
Then I think you run into it.
Yeah, I don't think you want to be outside. So. All right, well, I'm happy to disseminate the materials if anyone wants it. I can email it to you guys. My contact info is up here. I know it's kind of small, but badge, you can also get it from there. So if you like get my QR code, then you'll have my email. You can send me an email as well.
So it's great.
Yeah, a little bit. But thanks for attending. I appreciate you guys taking the time and sitting with me.
Thank you.